Well, the city of Miami is a popular destination for travelers, especially during the summer. The city is mostly known for its beaches and glamorous nightlife. And this year, another attraction. CGTN's Nitza Soledad Perez explains.
Miami has reinvented itself. Once known primarily as a party town, it's now also a luxury travel and shopping destination. This is part of the latest Louis Vuitton campaign. Miami was a chosen location, and Giselle Bündchen, the famous supermodel and recent Miami transplant, was the protagonist.
Portions of Miami are a lot like the collection. It's so beautiful.
After presenting this collection in Monaco, the French fashion house Chanel presented a stateside iteration of its 2022-2023 cruise show in Miami. The Miami Design District has become a mecca for luxury shopping, with high-end designers, restaurants, and art galleries. And the high-end shopper loves it.
We come here for the weather because we're from Toronto, but shopping is our next real reason because it has the latest fashion. Right. It has some of the designers that we don't get out of there in Toronto, so it's an excellent experience for us.
Because Miami is the luxury place you want to be. You have everything. You're not a store, you have store stuff for you.
What did you buy?
I think a lot. A lot. Dior shoes, bag, socks, everything. It's Miami. It's Miami. You have to live life.
Per Statistica, a market data portal, luxury goods sales in the U.S. racked up nearly $76 billion in 2023 and are projected to grow nearly 2% a year for at least the next 5 years. Luxury retailers owe a portion of that growth to international travelers who enjoy the luxury retail experience. But industry watchers say the average consumer mindset has shifted too.
Are we seeing more mainstream buyers just going for those luxury goods, going for that Yves Saint Laurent, for that Louis Vuitton purse, or is that my impression?
No, we definitely see that. We see that a lot because I think what happened in pandemic, that we're not saving money anymore. We're like, let's live this amazing life. And you know what? I always wanted to have this purse. I'm going to get it, right? And I think also we have a change who's buying, right? We have millennials right now, they have this purchasing power and they decide that it's a good thing to buy luxury goods.
Miami has yet to reach the levels of Paris and Milan. However, according to experts, it's definitely on the rise. Miami's makeover is seen as one positive side effect of the COVID-19 pandemic.
And this amazing thing happened which is you can work remotely. So guess what? You don't have to be close to your office. So if your office is in a very cold New York, you're going to think, hey, I'm going to sell this, tiny apartment that I have in Manhattan and buy myself amazing mansion in Miami. So many of those things happen. So we have absolutely the high net worth migration coming here. And, everything started to elevate, right?
Miami welcomed nearly 27 million visitors last year, breaking pre-pandemic records. Even Time magazine chose it as one of the world's greatest places of 2022. Nitza Soledad Perez, CGTN, Miami.
Okay, a lot going on with the U.S. economy and the global economies as well. We're going to take a deeper dive into the markets and the economies. Joining us now, Anthony Chan. He is the former chief economist at J.P. Morgan Chase. Always a pleasure to see you, my friend. Happy Friday to you.
Good to see you, Sean.
Okay, let's go back and talk about the markets just a bit. How have they digested Fed Chairman Powell's comments to Congress on Wednesday, Thursday? Going back and reading those, he's made it clear there are at least going to be one bump, more than likely two. All members of the Fed kind of support that. What does that say about the health of the U.S. economy?
Well, I think it really tells you that the economy is turning out to be a bit more resilient. It tells you that inflation is coming down because it has come down sharply, but not fast enough for the Federal Reserve's liking. So for that reason, they want to raise interest rates. But keep in mind that one of the reasons why the financial markets don't believe that the Federal Reserve will raise rates as aggressively is because they feel that the Fed has to talk a much more hawkish message than will actually occur, simply because they don't want the equity market to go up too much and financial conditions to ease too much. Keep in mind, Sean, the S&P 500 is up 13.5% on a year-to-date basis.
Yeah, and a lot of people say that is really probably a better benchmark of where the U.S. economy is right now. But let's talk about jobs as well, because the jobs news is good, but the Fed also concerned that because of that, it could be squeezing more in salaries, more in benefits, and that could hurt the economy as well. So it's really kind of a double-edged sword.
Well, it is. We are seeing that the labor market is resilient. We still have a lot of jobs for every person that's unemployed. In fact, just this week, I wrote an article for Barron's magazine looking at the number of people that are filing for unemployment insurance. And what I did was to look at all the prior recessions. And what you see is that, yes, unemployment claims have gone up if you look at the 4-week moving average, but they haven't gone up to the levels that are consistent with a recession, and not even up to the levels that are consistent with the beginning of a recession. So we're not there yet, Sean.
That's good news. Let's talk about the UK's rate decision as well. What do you think that's going to do? Could it have a ripple effect throughout the EU?
Well, I think that they almost had to. Remember that the UK has an inflation rate that is higher than the United States, 7.9%. And of course, in the United States, we have a CPI year over year about 4.4%. And what you see is, yes, they did raise rates by 50 basis points, but guess what? Their interest rate, policy rate, is still below that of the United States, even though their inflation rate is above. So they really had to do it.
And what about China? Because they've cut interest rates on in a couple of key areas. How is this going to help China keep its economy on track? Because really, in many ways, it has been the engine that has driven the global economy for so long now.
I think it was a good move by the PBOC, the People's Bank of China. They not only lowered interest rates this week, they lowered a couple of rates the prior week, and they have to because they want to stimulate their economy to grow a little faster. But right now, keep in mind that China has the luxury of being able to lower rates because, first of all, their producer price index is in negative territory, and their consumer price index is barely rising. And I look at the growth in imports, and it shows a little bit of sluggishness. So yes, cutting interest rate is the right move for China at the moment.
Okay, let's take a look at recent central bank actions globally. I don't know if you had a chance to hear our John Terrett from the floor of the New York Stock Exchange. We're talking about the UK, talking about the fact that Turkey raised theirs after a long period of kind of going against what many would consider the norm. What does this tell us about the state of the global economy? You talked about recession, not a major concern in the United States at this moment, but is it still on the horizon globally?
Well, I think that right now, there's no doubt in my mind that both the U.S. and the global economy will slow as you go into 2023. Turkey, of course, for quite some time was of the view that raising interest rates, even though inflation was rising, would actually make inflation worse, when we know that conventional economic theory tells you that when inflation is high, and it's been very high in Turkey, that's exactly what you need to lower inflation. And now, with the new regime, they are now pursuing conventional monetary and economic theory, and they are battling inflation just like other central banks around the world. So they are raising rates, but they probably should have been raising rates a long time ago.
Yeah. Anthony, people aren't talking about COVID, which is a huge relief for me. And I think we've kind of seen it with global leaders really bouncing all over. What are some of the key takeaways from Modi here in the United States? Anthony Blinken went to China, Premier Li in Europe. Are these visits good for the global businesses?
There's no doubt that with the easing of COVID, it's not over yet, but it's easing, that in fact businesses can start to transact, people are moving, and that's good for economic growth. We in fact have seen, we saw a big bounce in China, for example. We're seeing a big bounce in India. India now is doing quite well. So all these economies have an opportunity to grow now that COVID is easing. And I think it's a good thing for countries to take advantage of this window at which COVID is not offering the kind of threat that we were accustomed to a few years ago.
Yeah, always good to have those face-to-face discussions as we're having right here. Thank you so much. I certainly appreciate your time as always, and have a great weekend.
My pleasure, Sean.